Assalamu alaikum. Am I audible? Can you guys hear me? Can you guys see my screen? Please do let me know. Thank you. Thank you for the feedback. I will welcome you all on this the first revision class for the ATX for December 2023 exam session. Before I start the things on my end, so first I'd like to hear from you guys. So do you guys have any kind of queries, any kind of things to clarify with respect to ATX from any of the topic? Do let me know so that we can have word around that. Then I will start the discussion from my side. So before I start the discussion from my side, I request to you guys to share your queries / concerns throughout the ATX book, kit, lectures, anywhere. If any one of you is uncomfortable in typing the question, you guys can unmute and ask your question. Yes, Hassan, please go ahead. So let me open up the book and kit in the meanwhile. And this is to all again, any one of you.
Hello, Assalamu alaikum, sir.
Walaikum Assalam, Hassan Zaid, you're audible, loud and clear.
सर शोर तो नहीं रहता था सब आवाज में?
Perfect.
अच्छा सर, ये मुझे पूछना था, ये जो डीजल कार के लिए 4% और ऐड करते हैं, ये अभी भी यही है इस ईयर में भी?
Correct. That's still the same. The Pope, like
और
diesel
मैक्सिमम
car is equal.
7% ही है?
That's correct.
अच्छा
Easter, please proceed with the question. Rishu, your question is around degrouping chart. So do you have any particular question around degrouping chart, or you want to understand this thing in general? Probably I need to open up the corporation tax related note. Just give me a couple of seconds. Easter, in the meanwhile, you can ask a question. And again, humble request to all of you, please do participate, all of you, else there is no point of having this session. So if still I have to speak, then very honestly, there is no as such point to having this session.
सर, अगर एक बंदा एम्प्लॉयड भी है और सेल्फ एम्प्लॉयड भी है तो एडजस्टेड इनकम किस तरीके से कैलकुलेट करेंगे?
Adjusted income has its own formula, so that's irrespective of the employment. But till what I understand, your question is basically if a person is self-employed, then adjusted income is net income, and if employed, then we have a defined formula. Are you asking with respect to that?
अगर बंदा दोनों हो तो फिर क्या करेंगे? दोनों में से कौन सा वाला लेंगे? उसकी यानी एडजस्टेड इनकम कौन सी वाली होगी, नेट इनकम या नेट इनकम प्लस बाकी चीज़ें जो होती हैं, एम्प्लॉय और एम्प्लॉयर कॉन्ट्रीब्यूशन?
So when we use the word net income, sorry, we use the word net income means it is inclusive of non-savings / other income, savings income, dividend income, right? And obviously other / non-saving income is the sum of property, employment and trading. So net income would be sum. When we gonna make the certain adjustments, obviously that would be relating to employment only. But that formula which you are referring is just to give you a reference. So that's not a hard and fast rule. If you follow the legal terminologies exactly uses the wordings which is there for the employment income. For simplicity, based on the fundamental knowledge of taxation, we summarize that thing like for self-employed, adjusted income is equal to net income. But if you find out in the book, kit, for example, it would not be mentioned. It still assumes minus nil, minus nil, minus nil.
सही।
I would like to use the OLP after compute. For example, instruction will be notional and then we need to use in a question. So, to Easter, on your question, overlap profits can be used in two ways. One, it can be partially used at time of change of accounting date. First, second, if not change of accounting date, then by default, there is only one thing. And the only thing with this is they will be adjusted at time of business cessation. So at time of change of accounting date, there can be either increase or decrease, whatever would be the situation, depends. But other than that, at time of cessation, they will be completely adjusted. You're welcome. So I am here, Rishu, on your request regarding degrouping charge. So that would be somewhat here after losses. Here I am. So this is to you a ratio. I hope you are here and you can hear me, right? So what is degrouping charge? What's the background of degrouping charge? You know, I will talk about for sure shortly, but out of the professional marks, 20 professional marks, there are four broad categories, and out of the four broad categories, there is one aspect of commercial acumen. So under the commercial acumen, HMRC examiner expect you guys to have a knowledge of if something is of any particular legislation. Like for example, just to give you a reference, what's the concept of degrouping charge? Why we have a concept of degrouping charge? So this is the expectation as well, that you will be aware for any particular legislation, if introduced, why introduced, what's the background behind that. So thank you, Hassan Zahid. So I'm following this thing as well. Like if I found anyone unmute, I'm going to mute it. Okay. So Rishu, again, degrouping charge. So what's the background of degrouping charge? The background of degrouping charges, for example, if we make a transfer of asset within the capital gains group, the transfer of asset between the capital gains group would be always at no gain, no loss, i.e. at index cost. So it's not a discretion, it is somewhat mandatory, and that is again irrespective of the consideration. Like we follow the concept for spouses. Okay. So it is possible, for example, I parent you a subsidiary company, I transfer the assets to you and then sell you out as a company, I sell you out. This transfer can be other way around as well. So for example, I take the assets from subsidiary company, again no gain, no loss, and dispose of the subsidiary company. So via this thing, the tax can be avoided within the group companies, especially those who are in capital gains group. Am I clear till now? If yes, then I like to move ahead. Else we need to first clarify this point. Like, what's the tax avoidance in general? What is the possibility of tax avoidance in general within the capital gains group company? Now, in such situations, again, tax avoidance is not illegal, but HMRC really don't like the tax avoidance because there is a loss to HMRC in the tax avoidance, right? I hope you understand it. So to avoid the tax avoidance, HMRC introduced the anti-avoidance legislation, and one of the legislation is degrouping charge. Now, for the degrouping charge to be applicable, if there is a transfer of asset between the capital gains group company and within within 6 years of transfer of such asset, if company leaves the group, and at time of leaving the group, still owns the asset, other company still owns the asset, then there is a concept of degrouping charge. So for degrouping charge, two things to check, three things to check to be exact. First, there must be a transfer of asset between the capital gains group company. Second, the company is leaving the group within 6 years. Third, and the leaving company, the company who is leaving the group, still owns the asset. If these three conditions are met, then there is a concept of degrouping charge. So it's like, it's kind of a consolidation type of concept. So if the capital gains group company dispose of the asset outside the group, it means the group as a whole realize the gain. So like a consolidation type of thing. So in such situation, there is no concept of degrouping charge. So degrouping charge concept arises if within 6 years of asset transfer, company is leaving the group, and at time of leaving the group, it still owns the asset, then the concept of degrouping charge arises. Yes, there's some question, I guess.
सर अगर पेरेंट कंपनी सब्सिडियरी को सेल करती है तो भी एप्लीकेबल होगा या सिर्फ तभी होगा जब सब्सिडियरी सेल करेगी, यानी दोनों में होगा या सिर्फ एक केस में होगा degrouping charge?
So in this whole discussion, I never ever used who is the purchaser or who is the seller. So that's irrespective who is the purchaser and who is the seller for degrouping charge. Right? I hope the conditions point is clear, like when the concept of degrouping charge will arise. Second, how the degrouping charge is calculated. Like it's fine, I know when there will be a concept of degrouping charge, but how do I calculate the degrouping charge? Second important question. The degrouping charge is calculated based on the assumption that imagine if the asset is transferred at market value at the time of transfer, if the asset would have been transferred at market value instead of no gain, no loss, then there must be amount of gain at that time, right? Whatever is the amount of gain that time, that gain is called as degrouping charge. So imagine, for example, there is a transfer of asset between groups, let's say 4 years ago. The transaction would have been recorded at no gain, no loss under the capital gains group principles. Imagine if this principle not applied and the transaction would have been recorded at market value 4 years ago, then whatever is the amount of gain, that gain is called as degrouping charge. Am I clear on this point, how to calculate degrouping charge?
Sir, what if there was a loss instead of a gain if we take the market value?
So tax avoidance or stuff like that generally considers the upside risk, the gain element, because avoidance is basically on the gain side. If there is a loss side, then there is no such tax avoidance thing exist. Perfect. Last. So we know the concept. We know now how to calculate the degrouping charge, the third and the last point. Fine. The degrouping charge concept arises. Fine. We calculated it. Now, what to do with that? So after calculating the degrouping charge, what's next? What to do with that? So what to do with that? First of all, degrouping charge is applicable on vendor company, i.e. the parent company, i.e. the company due to whom degrouping arose. And obviously, why degrouping would have arisen? Because parent company would have disposed of the shares of the subsidiary company, right? So since parent company disposed of the shares of the subsidiary company, hence the concept of degrouping arise. So degrouping charge is applicable on the vendor company, the parent company. Principle number one to clarify. Irrespective who disposed of the asset, who was the purchaser, who was the seller. Just to give you a reference, for example, parent S1, S2, let's say 100%, let's say 100%. S1 sold the asset to S2. S1 sold the asset to S2. And P dispose of this company. We dispose of this company. So would the degrouping charge be applicable? The answer is yes, if the conditions are met. So obviously, since P, S1 and S2 were in capital gains group companies, the transfer of asset would have been at no gain, no loss. And since the transfer of asset would have been at no gain, no loss, so if S1 is leaving the group within 6 years, at time of leaving the group, still owns the asset, like S2 still owns the asset, right? So it's not about S1 still owns the asset. The group still owns the asset. Then the concept of degrouping charge arises. Now, due to whom degrouping, the concept of degrouping arose, that is basically the parent company who disposed of the S1, which causes the degrouping charge to arose. Hence, the degrouping charge would be applicable on this parent entity. Now, how the degrouping charge is applied? So parent has disposed of the subsidiary, i.e. the shares of the subsidiary. So parent would have for sure received some consideration against it. So whatever is the consideration, that would be recorded as DP. Under the consideration received, add the degrouping charge. So whatever is the degrouping charge we have calculated over here, that would be recorded. Consideration received at degrouping charge, the sum is like total consideration less index cost of share. So if whatever is the index cost of share of S1 deducted, then the amount is gained. However, on these gains, we would get SSE if conditions are met. And I hope you recall what are the conditions for SSE. To Rishu, the answer is yes. Like this understanding is perfectly correct. Second, what they give me the cost. So yes, for sure, the cost at the indexed cost, I would use the word indexed cost at time of the transfer would be given for sure. The market value would be given for sure. And there is a possibility that they give you the consideration amount as well, which can be same as market value, which can differ from the market value, just to create a confusion. Easter, I hope your question is clear. Question number 38. Part B.
सर एक चीज मुझे ऐसी में पूछनी है, ये इसमें अगले पेज पे जाएगा, उसमें क्वेश्चन जो है ना, उसमें मुझे एक चीज पूछनी है, डी ग्रुपिंग का एक क्वेश्चन है।
I am on the
इसमें
degrouping question.
इसमें जो आपने कॉस्ट ली हुई है, दैट्स राइट वाले उस पे व्हाट टू डू के नीचे।
Yep, so that's my typo error.
अच्छा सही
So
है, इतना ही पूछना था बस। 50 आएगा ना
those
उसमें?
who raised it, yeah, that's correct. So that should be 50. So by mistakenly, I have considered the cost of the asset rather than the cost of shares.
बस सही, इतने पूछना था।
Very clear, ve- very clearly it should be this amount. Perfect. To your question, Umesh,
आप इनहेरिटेंस टैक्स में मूव कर रहे हैं?
sorry,
इनहेरिटेंस टैक्स के नोट्स में मूव कर रहे हैं आप?
I'm just going to ask Umesh. Umesh, question number 38, part D. So is it from the notes? Is it from the kit? What's the reference?
सर ये कॉर्पोरेशन टैक्स खुला रहने देगा, उसमें कुछ चीज़ें पूछनी है, सही है?
Hmm. Umesh, waiting for your feedback. Umesh, this question 38, part D, IHT implication, is it from book? Is it from kit? Like, what's, where should I refer? Okay. Hmm. Yep. So I am here. So you asking for the IHT implications of this point, part D? Nice. Is this the question? Because on 15 January 23, John gave agricultural land with an agricultural value of 175,000 to her son, Charles. John had purchased the land during 2011 for 92,000. It has been let out to the farmers. The most recent tenancy agreement started in June 13 will soon end, and John has obtained planning permission to build residential accommodation on the land. The value of land with planning permission is 300,000. Charles owns adjoining agricultural land, and the value of this land will increase from 210. What's this 210? To 250 as a result of the gift. I'm just looking, where is this 210 coming from? Yep. So I am here. Your question is, to be exact, that's around, IHT implications of this? So IHT implications, first of all, the diminution in estate for John would be recorded. So for John, the diminution in estate would be obviously its market value, which is, I can see, which is like 300,000, right? Then on John, the agricultural property relief would be available since the agricultural value of the property is 175. So the agricultural property relief would be 175,000. John is not using this land herself for farming purposes. So this was let out. In such situation, I hope you do recall what should be the APR percentage. So 175,000 multiplied by APR percentage, annual exemption, if available, annual exemption brought forward, if available, that would be the net PAT value. Now, if John survived for 7 years, exempt, if expired within 7 years, it would become taxable. So that was the IHT aspect. Umesh, can you please, if this is clear, I request you to exactly point out your question. Yep, that's correct. So that's 50% is correct. So again, uh, can I read this paragraph? So can you please raise what's your exact query? So what should be, I walked you through. If still I not addresses your query, please do raise your hand specifically. For APR relief, so this is something which can be typo error on the exam kit perspective. So suggest you to do have a look at the book if you are not comfortable, and if there is a contradicting statement, I can confirm you that 50%. Son, APR relief, APR part of IHT. Mhm. Thank you, Rishu. IHT implication. The gift of agricultural land will be PET for 300. So we discussed the diminution in estate is 300, hence PET would be 300. Recorded on 15 January 2023 and will not become chargeable unless John dies within 7 years. So we discussed this 7 years. The increase in the value of her son Charles' property is irrelevant in valuing the PET because only the diminution in value of John estate as a result of gift is relevant. If anyone is not clear with this paragraph, do let me know. If the PT becomes chargeable, before dying 7 years, APR at the 7 years. However, relief will only be available if at the date of John death, Charles still owns the land and still qualifies as agricultural property. So, uh, to you, Umesh, I personally feel this is something which to be off. This is something which I not explicitly called out. This is something which I'm happy to discuss if anyone is not clear. Else, like this paragraph in as a whole, we discussed this paragraph as a whole, we discussed. Even we had a discussion on annual exemption as well. It doesn't talk about, I'm not aware of the overall scenario, so I was particular to the scenario point number D. But this is the fundamental principle of the BPR and APR for lifetime gifts, i.e., if if giftee transferee doesn't hold the asset at time of the death within 7 years of transfer or gifter, then these reliefs are clawback. So I hope you recall the only 100% is the dispute. So still this paragraph is not clear. So let me have a walkthrough. If the PET becomes chargeable, so this is a PET 300 as a result of John dying before 15 January 2030. So this is like 7 years element, right? From this day. APR relief at the rate of 100% based on agricultural value will be available. So I assume nothing to highlight. APR is on the agricultural value. It's not on the market value. Whereas diminution in state, PET, CLT, state, all of these things are recorded at market value. 300,000 is the market value of the land. Whereas it's not the agricultural value. Agricultural value is 175,000. So APR relief would be available at 175,000, not at 300,000. This is because the land is let out for the purpose of agriculture and has been owned for at least 7 years. So the land let out element, there was its own qualifying period for let out, which satisfies over here. That's why eligible for the agricultural property relief. So, Umesh, this is something which we can refer to the book. It should be 50. It seems to be a typo error on the exam kit end. So that should have to be. So if let out 50, if owned and in own use, that was 100 with respect to APR. With respect to BPR, if unquoted shares 100%, share of partnership 100%, the business asset 100%. With two instances, there were 50%. The first instance of 50% was asset owned by individual but used in business 50%. And if quoted company with majority holding, on that time it was 50%. Can you guys tell me, is this paragraph clear to all of you? So issue for APR, if in own use 100%, if let out 50%. Own use means used for own farming purposes. Thank you, Abdullah, for the feedback. Can I have more feedback around this, please? Perfect. Perfect. Thank you all for the feedback. Yep. So that's still typed by the human being. So yes, they can be typo error. I would not say like they can't be any typo error. But being tutors, being the approved learning partners, they share with us these kind of typo errors, which later on the tutors, while assessing, discussing with their students, identify and provide via feedback. So they do fix up this in next refresh. But honestly, the text is the very interesting subject where at every time there is a change in tax rate, and again the whole of the exam kit becomes exposed to such kind of typographic errors.
सर पेज 34 पे आएगा कॉर्पोरेशन टैक्स के।
I'm on page 34. Yes, I'm on page 34, please.
34 सर उसका नोट्स के उसका नहीं, पीडीएफ का नहीं, इससे एक पेज पर।
You are asking about page 34 of?
Of the notes, not the PDF.
I guess I'm on. Oh, sorry. This is page 34. Losses for
सर
a
ये
company.
प्रॉपर्टी लॉस का स्टेप 2 जो है इसमें है रिमेनिंग लॉस को एडजस्ट की दो कंडीशन है, एक करंट ईयर
So,
मैक्सिमम पॉसिबल एक्सटेंट और अगेंस्ट फ्यूचर टोटल इनकम एनी अमाउंट।
no,
तो ये
it's
एंड है
not
या और है?
conditions. It's not conditions. It's still a step. And you can
स्टेप्स
say
है पूरा।
this, it's a step 2A, and this one is the step 2B. And again, since these are a step A and B, so you cannot break it. You have to follow this chronology.
अच्छा सही। अच्छा इसके बाद और आगे जाएगा, इसमें
Mhm.
आपने जो एडजस्टमेंट प्रायोरिटी बताई है एक दफा एक्सप्लेन कर देगा कि किस तरीके से चूज करते
So too many losses in current year, which loss to prefer? So too many losses in current year, which loss to prefer? So the first preference is around interest income. Second preference is around excess management expenses. It can be property income either. The last preference is around trading income. So why the first preference is around interest income? Because if I talk about in general, in most of the situations, there is an interest income or there is an interest expense. If I ask you, that in general, is there interest income or there is interest expense? In general, there is interest expense. And since in general there is interest expense, uh, that's why we prefer to adjust it first, right? Because this is something which is like, there are some of the losses which creates the noise, which creates the worry. But if interest deficit, so that's not a worry thing, because generally we have the interest expense, not the interest income. So having deficit is a normal thing. So that's why we do prefer to adjust it in the first instance. Excess management expenses, property loss, that remains the second priority to adjust with the total income. And again, trading income would remain in last. Why trading income would remain in last? Because uh, property income, access management expenses, they cannot be carried back. They can be only adjusted with current year or they can be carried forward. But since trading income has other options as well, like carry back, like carry forward and adjusted in group as well. That's why we keep the trading loss aspect towards the end. Thank you.
सर थोड़ा सा और आगे जाएगा पेज 38 पे, ये क्वेश्चन 17 में कुछ पूछना था मुझे।
Yes.
इसमें बेसिकली यानी एयर चेंज हो रहे हैं ना बार बार, तो ये जो 30th सितंबर 20 वाला है, इसके नीचे कैलकुलेशन जो आपने की है वो समझा देगा।
And these, so this is, these kind of things should have to be raised in the query session, honestly. Well, so you are asking about the treatment of this one. Umesh, just give me a second. Are you asking about this one? 170,000 of loss. So with this 170,000 of loss, what we can do, what we cannot do, simply adjust it with current year total income, which is like 30,000. Then we can carry it back up to 12 months. So if I adjust it over here, 105,000, since this is period and this period is of 6 months. So if I adjust the loss with this 105,000, it means I had carried it back, but to the extent of only 6 months. Whereas as per law, as per the tax rule, I have an opportunity to carry it back up to 12 months. So I am like carried it back already for a period of uh 6 months. So I can further go carry back and further carry back. I can go up till 36 further 6 months as well. So when I consider further 6 months, the problem with the further 6 months element is this 702,000 is not the result of 6 months. The 702,000 is the result for a period of 12 months. So I don't have the right on this complete 702. I have right only to the extent of 6 months result. So I calculated the profit of 6 months. I calculated the remaining loss. The maximum amount of loss which I can adjust is either the loss will be finished or the income would be finished. So I am like, if there is a profit of 351, loss of 35. So what the maximum amount of loss which I can adjust? The maximum amount of loss which I can adjust is like 35. But this is like what if analysis. Like let's say if the profit is 60,000 instead of 702, then how much loss can I adjust? Then 60,000 multiplied by 6 upon 12, the profit becomes 30. The remaining loss is of 35. So how much amount of loss can I adjust? The maximum amount of loss which I can adjust is 30,000 in this situation. Just give me a second. Let me check why 30,000 only. So this is based on the fact, like on the assumption that if 30,000, then how much I can adjust. So that's purely what if analysis. That's it. Perfect. On your point, Umesh, you are asking about question 46 from the example. Question 45. Let's check in the textbook. But since it's the scanned version, so I cannot put the control F over here. That should be with page 384. So that's APR and BPR. So we are here for BPR. APR is given at the rate of 100% on the agricultural value of agricultural property, right? Have a look. So this is the reason we are following this 50%. APR is available at 100% on most agricultural property. However, only 50% relief is available if farm is a tenanted farm and lease was taken out before this, and at the date of transfer, the owner does not have the right to obtain vacant position within the next 2 years. So these are two very honestly very specific conditions. So generally, if we look that it's a tenanted farm, then generally we talk about the relief to be 50%. However, uh, however, other than the tenanted farm situation, and again it's and so it's not or and means all of the conditions should be met, else the APR is 100%. Exceptions to the minimum. So these are still uh, a technical conditions, but very honestly, uh, can I don't recall even a single situation in the exam kit where these kind of exceptions were examined in the past. And this is the first revision class, but obviously, if the queries are unanswered, then there is no point of revision. So So, Rishu, at the moment, my plan is first to have discussion, some sense on the ethics marks, professional marks, ethics and professional marks, paper format, paper pattern discussion, and at least one question of section. Then for tomorrow, in my mind is we can have discussion on section B type questions. So if there is any further query, happy to take. I hope the APR issue is pretty much clear. Else, I like to start my own discussion. Okay. So before I start the discussion on the ethics, the first discussion which I like to have is around the paper format and related stuff. While having this discussion, I will be having some more in-depth detailed discussion on how to get the professional marks, etc., etc. Because the reason being I'm so much emphasizing on the professional marks is professional marks are now the 20% of the total marks. That's why I try my best to give a much more emphasis on this. Okay. Let me have word around a background discussion. Paper format. Needless to say, all of you guys are aware. Paper are based in two sections. Section A, section B, and total. In every so in section A there is question 1. In section B there are 2 questions, question 2 and question 3. Technical marks 40, 20, 20, total 80. Just give me a second. Let me close out the book and the kit because they are like bit heavy files and ten, 5, 5, question 1, 50. So I hope all of us are aware with this particular paper format, right? Now, keep this thing in mind. In addition to this, in section A, section A will be a long case study. And in section A, out of 50 marks of section A, 10 marks are professional skills, 5 marks are based on ethics, and 35 marks are technical. Of this 35 technical marks, of this 35 technical marks, five marks would be on. So if you ask me in section A, overall basis, the technical marks of text would be 35, out of which 5 would be for sure VAT. So non-VAT related. Other than VAT, the marks are like in total 30. This is first thing. Second thing, there's some more discussion around the professional skills marks. Professional skills marks. In the professional skills, there are 4 professional skills which examiner test or examines. The first professional skill is communication. The second professional skill is analysis and evaluation. Third professional skill is skepticism. And the fourth professional skill is commercial acumen. Now, keep this thing in mind. Section A will cover all 4 skills, whereas for section B, combination of 2 skills will be examined. However, this communication will not be examined in section B. Now, let me have some more in-depth discussion around what should be there in the communication, what should be the skills which examiner expect under the head of analysis and evaluation, what should be under the skepticism, and what should be under the commercial acumen. So let me have a brief discussion about each and every skill. So let me have first word about communication. What is the examiner expectation under communication? Under the communication, this means you guys have to express yourself clearly and convincingly through the appropriate medium while being sensitive to the needs of the requester. So for example, if your manager has requested you anything, client has requested you anything, so you should be vigilant who has requested you, what is requested to you. So is email requested to you, is report, memo, whatever is requested to you. Okay. So the key pointers to adhere over here is you should be very clear with your information. You should be willing to inform. You should be persuasive, and it should be easily clarifiable and simple. So this is the broad categories of the communication. Second one is like analysis and evaluation. Under the analysis and evaluation, I just give a reference of this analysis. No, not this one, analysis and evaluation. In under this category, in the analysis and evaluation, students like you guys have to thoroughly investigate and research information from a variety of sources and logically process it with a view to prioritize activities and arriving at an appropriate conclusion or recommendation. The analysis should form part of a comprehensive evaluation of a matter where you guys have to carefully assess situations, proposals, and arguments in a balanced and cognate way, using professional and ethical judgment to predict future outcome and consequences as a basis for sound decision making. Important thing is professional and ethical. So you should remain professional and ethical as well. So what are the key takeaways for this analysis and evaluation? So under the analysis and evaluation, the key elements should be you should able to demonstrate the investigative behavior. You should be consider all of the relevant information rather than pick and choose. You should assess each and every aspect and do consider its relevance with respect to the given scenario. And last, not the least, you should appraise the relevant information. Series which the examiner expect as part of the analysis and evaluation. The third one is skepticism. And the fourth one is commercial acumen. Now, what is skepticism? What is commercial acumen? So let me have few cents on these lines as well. What is commercial acumen? What is skepticism? What is skepticism? Under the skepticism, generally, the students have to explore, question, and challenge information and views presented to them. Students are supposed to identify all information is available or whether there may be any underlying bias to fully understand business issue and establish facts objectively based on ethical and professional values. So, for example, to be eligible for any kind of relief, so few of the common examples of skepticism. If there is anything, any information not available with respect to any relief, availability of such information, that is the aspect of skepticism. For example, if the client says, I'm just giving a reference, this is my state calculation. I have a sound knowledge of the tax system, and while calculating my estimated estate, I have excluded my house, my main residence, because I understand main residence, i.e. house, is exempt from IHT. So the point is, you should be able to analyze and evaluate your own professional judgment whether the information given is true or incorrect. And honestly, you would be able to comment only, and for this point, you should be able to comment only when you have a proper knowledge. Your mind should be able to think what if analysis. If we do this, what will be the consequences? If we do this, what will be the consequences? So in such situations, we will be able to apply the skepticism. So to able to demonstrate the skepticism, the individual should able to explore, person should have a question mind, and the important skill of under the skepticism is challenge and critically assess. Okay. Last aspect, commercial acumen. What is commercial acumen? Commercial acumen means that students have to show awareness of the wider business environment and external factors affecting the business, and use the commercially sound judgment and insight to resolve the issue. Exploit opportunities and offer valid advice and realistic recommendations. So if in a given situation you observe any of the valid thing, valid observation, for example, if a person delays the VAT registration, the business is of the view they will be able to save the admin cost. That's the valid point. So the business will be able to save the admin cost. But other way around, if you delay your compulsory registration, then HMRC can penalize you in the form. So there can be a legal implications. In addition, one financial implication would be HMRC would ask you to pay 20% from your overall collection from customers, resulting in your decline in revenue. So if you suggest this point, for example, there is a discussion around delaying the compulsory registration. So this is the commercial acumen. To get the commercial acumen, you need to demonstrate awareness. You should able to demonstrate the insights, and you should be able to recognize key issues and use own judgment. Commercial acumen is not limited to the text knowledge. Like I said, uh, demonstrate awareness. Like I said, commercial decision making, since it's a commercial acumen. So under this category, at times you need to think out of the box. Out of the box as in out of the text box. So for example, could be possible, you need to think like, let's say, uh, if we follow this approach, there would be a tax saving. I agree. But under this approach, there can be a liquidity constraint. So if you demonstrate the liquidity constraint, so this is something which is a commercial acumen which you are presenting. So concludingly, it's not like these things are only limited to the text knowledge. These skills are like beyond the text knowledge as well. So I'm done with the discussion of these professional marks. Taking a pause over here. If anyone has any question, do let me know. Else, I love to move ahead with the next discussion. Perfect. So I'm not going to discuss the tax planning thing, rather I'm just spending some time on this ethics, then we'll start the question. So with respect to this ethics element, so ratio, if whatever is asked, so for example, if a report is asked, you are supposed to write a report, etc., etc. So that's part of the communication aspect. So if you are asked to write a report, you are supposed to answer in a report form. If you are asked to write a letter, you should write in a form of letter, etc. And one further thing, as of the as part of the communication aspect, one thing I always do advise to my student, like while solving the question, use the headings consistently. So use the heading consistently means, for example, there would be a heading 1, heading 2, heading 3, heading 4. There should be one format, one pattern for heading 1. Let's say bold, italic, underline. Heading 2, bold, underline. Heading 3, bold. Heading 4, underline only. So these kind of things should be taken care of. Generally, the answers are on 3, 4 types either. Either it's a memorandum, it's a report, it's a letter, it's a meeting note. Everything has its own format, and whatever is the format, we are supposed to follow that. Umesh, a very good question. So, can we use the short form? So, yes, you can use the short form, but it is strongly advisable to disclose the abbreviation once in the question. So, for example, write substantial shareholding exemption in bracket SSE, and then you can freely use the abbreviation SSE throughout the question. Same thing goes for other abbreviations as well. Okay, let me have some discussion around the ethics. Ethics in the exams, ATX, ethics is basically divided trust, HMRC errors, tax avoidance versus evasion, and the last not the least, money laundering. Every ATX exam includes an ethical component for 5 marks. The question on ethics will be confined to one of the following areas shown in the above diagram. It's normally of worth of 5 marks. So the first, prospective client, or you can say the new client. In this type of ethical issue, we will be having a new client, and the requirement will be that what factors we should consider before accepting this potential client. The factors need to consider as follows. We must obtain evidence of client identity. So if it's an individual, let's say we must have to check his national identity card, cross check with the national identity database. Let's say in case of company, we need to assess its a certificate of incorporation, memorandum of association, and cross check the registration number of the company with the Securities and Exchange Register. The primary business address and registered office for each of the client, proof of incorporation, details of directors and shareholders, and the identities of those persons instructing the firm on behalf of the client. So those who are allowed to instruct the clients on behalf of the firm, like it should not be the case that everyone at the client can instruct the firm. No. There should be a limited point of contact to the firm, and that should be very clearly documented. Moreover, we must have regard to the fundamental principles of professional ethics. This requires us to consider whether becoming tax advisor or prospective client would create any compliance with these principles. For example, integrity or professional competence. So what is integrity? We must consider the appropriateness of client attitude to comply with the laws and the disclosure of information to HMRC. Competence, we must ensure that we have the skills and competence necessary to be able to deal with the matters which may arise in connection with prospective client. If any such threats are identified, we should not accept the appointment unless the threats can be reduced to an acceptable level via the implementation of safeguards. Now, in general, we should contact client existing tax advisors in order to ensure that there has been no action by client which would prevent the acceptance of appointment on ethical grounds. So, for example, there is no pending cases or etc. like the reason for change of tax advisor by the client. We must carry out a review in order to satisfy ourselves that client is not carrying on any activity which may be regarded as money laundering. If we notice any such thing, we should not accept an appointment unless we are in a position to reduce this to an acceptable level. Conflict of interest. Conflicts can occur in the following situation, where a member acts for a client and is then asked to act for another party in a transaction. Acting for both parties in a divorce, acting for the divorce, or acting for the employer and their employees, where the advisor may benefit from the transaction. So, and this is like for reference, the 4 examples which are mentioned, that these 4 situations can possibly create a conflict of interest. It may be acceptable to act for both parties as long as the following safeguards are put in place. What are the safeguards? First, the potential conflict should be pointed out to all of the relevant parties. So if there is any potential conflict of interest, you must flag that potential / possible conflict of interest to all of the parties at all of the stages. Like, be transparent. Consent should be obtained to act for them. And obviously the consent should be in writing. It should not be in a simple verbal way. It should be in writing. Like, I am working for employer, take the consent from employees, etc., etc. The firm must have clear guidelines in relation to confidentiality. And should considered a need to use separate teams for each client. So, the fourth statement in audit language is called as creation of Chinese walls. Then the next discussion is, is HMRC errors or tax irregularities. So what are the HMRC errors? What are the tax irregularities? If a member becomes aware that client has committed a tax irregularity. Now, what is tax irregularity? Irregularity means client is not disclosing any income which is taxable due to any difference of opinion or genuinely, but client is not disclosing the information which should have to be disclosed, or client is making false claim against any kind of relief or exemption. This is tax irregularity. Example number 2. Example number 3 about the tax irregularity is if client notice like HMRC has made any kind of error and the client is not disclosing it, that is also a tax irregularity. Okay. So if we notice like client has made a tax irregularity, then what should we do? If a member becomes aware the client has committed a tax irregularity, they must discuss it with the client and ensure that proper disclosure is made. So we need to ensure that client is disclosing that irregularity properly. Examples would include, so what are the general examples of HMRC errors or tax irregularity? Not declaring income that is taxable. So by chance, we discussed that. Claiming relief to which they are not entitled. So for example, they are not entitled of any kind of particular relief and they are claiming it. Not notifying HMRC where they have made a mistake giving rise to an underpayment of tax or an increased repayment. So if we notice any such instance, then we are supposed to inform HMRC at earlier. Where a client has made an error, it will be necessary to decide whether it was a genuine error or deliberate or fraudulent, because the error penalty depends upon the nature of the error. Once an error has been discovered, the member should explain to the client the requirements to notify HMRC as soon as possible and the implications of not doing so. Because you understand, if client make disclosure at its own, the penalty percentages will be lower. With prompt disclosure, bit higher, and the maximum penalties you are aware. So that's why we need to explain it. If client still refuses to make a full disclosure, the member should cease to act for the client. No need to act for the client then. Must then also write to HMRC informing that they have ceased to act for the client without disclosing the reason why, because you owe a duty of confidentiality. Must then consider their position under the money laundering regulation. So isn't it like you HMRC won't uh, make you like you are part of this money laundering. Next, tax avoidance or tax evasion. Now, what is tax avoidance, tax evasion? Evasion is unlawful. A taxpayer who dishonestly withholds or falsifies information for tax evasion purpose may be subject to criminal proceedings or suffer civil penalty. Tax avoidance is the use of legitimate means to reduce the incidence of tax. However, the courts are wary of schemes or arrangements, the sole purpose of which is to avoid the tax. And honestly, this is something which needs to disclose. Last, money laundering. All business within regulated sectors must appoint a money laundering reporting officer within the firm. Where a report is made, the client should not be informed, as this may amount to tipping off, which is an offense. So tipping off is an offense. Should not be informed to the client about the money laundering thing. Last, not the least, the last is in the ethics universe. The last discussion is around the GAR concept. The GAR stands for General Anti-Abusive Rule. The general anti-abusive rules are made by HMRC to combat tax advantages arising from abusive tax arrangements. Now, what are abusive tax arrangements? Arrangements are abusive where they cannot be regarded as reasonable course of action. For example, where they include artificial steps or intend to take advantage of deficiencies in the tax legislation. So if you are making a series of transactions to save the tax, then such thing is basically called as series of transactions. The concept of GAR arises. If general anti-abusive rules arises, HMRC may respond it by increasing the taxpayer liability, accelerate tax payments, or delay refunds, and ignore artificial steps in an abusive scheme. A penalty of 60% of tax advantage obtained through the GAR can be charged. So it's not a mandatory thing. So it can be charged if HMRC notice like you are trying to be too smart, getting artificial steps to save the tax, then HMRC can further penalize you. Lastly, dishonest conduct of agents. There is a civil penalty of up to 50,000 for dishonest conduct of agents. So if HMRC noticed like any agent has made a dishonest thing, so there can be a civil penalty of 50,000. In cases where the penalty exceeds 5,000, HMRC may publish the details of penalized tax agents. With agreement of tax tribunal, HMRC can access the working papers of a dishonest agent. So these are the few pointers relating to the ethics. So to Hassan Afzal, GAR is not an evasion. So GAR is basically, technically it's avoidance because you are not breaching the law. But what you are doing is also not the true substance of the transaction. So evasion is very clearly illegal. So just to give you a reference, so for example, if you are creating, if you are making a paper marriage just to save the tax, like to take the spouse's exemption, or you are making civil partners to take the benefits of transfer of the tax benefits available to the spouses or civil partners, right? Such thing is it a genuine tax saving? If you achieve the tax saving via this, is it a genuine tax saving? The answer is no. Since it's not a genuine tax saving, since it's not a genuine tax saving, hence this is to be referred as GAR, General Anti-Abusive Rule. So I hope the GAR aspect is clear. Now, let's start the question. Can I request you guys to log into your ACCA platform, please? So, for example, if the agent is involved in somewhat, if HMRC notice that client has made this suggestion to proceed with the general anti-abusive rule rather than warning the client, the tax agent has provoked for this thing, then such things are captured under the concept of dishonest conduct of agents. So there is no question. So probably these kind of things are general ethics related discussion. ACCA platform, please. Rishu, so this is GMT. So 3 GMT means we are talking about 8, 9, 10, 11. Yeah, I noticed this email. So if any issue in between of our class timing, we can up or down our class timings accordingly. I hope you guys have uh, um sure issue. Let me check slash assess it. Will update you guys accordingly. Yes, please. So can you guys please confirm me? You guys have logged into your ACCA practice platform. Can I have more feedbacks around this, please? What about the rest of the people? Perfect. So let's start any of the question. So I just entered into the practice paper 1. I hope you guys can see the practice paper 1. Please log into practice paper 1. And I'm heading practice paper 1, instructions. Should we start now? Probably just a heads up, probably will be overrunning since we are starting this question section A, question 1. Very lately, but I'm like, that's up to you, Hassan Zahid. So, let's start with the question. Corey, personal situation. You are an ACCA student working for a firm of accountants. Your manager has had a meeting with Corey, a client of your firm, and requires your assistance to draft a memorandum to deal with the issues raised. A diagram summarizing the relationship between the parties is set out in Exhibit 5. So I can see there are 5 exhibits. Corey has recently returned to the UK, and after a period of living overseas in the country of Medora. In addition to some of the ethical considerations which have been raised by your manager, in addition to some of the ethical considerations. So one thing is for sure, there are some of the ethical considerations, but in addition to some of ethical considerations, Corey requires advice in respect of clarification of his UK resident status, the capital gains tax treatment of disposal of some disposals which have occurred, the inheritance tax consequence of certain gifts which his mother is proposing to make, the tax deductibility for tax purpose of certain costs which are to be incurred by Quad Limited, a new company which will be established, the availability of tax losses within Q Limited, extent to which they can be relieved. Your manager has prepared a memorandum summarizing his meeting with Corey. Relevant extracts, what are you required to do, are contained in the exhibits available on the left-hand side of the screen. Exhibits are Corey personal situation, disposals made by Corey, gifts by Emmer, proposed gifts by, and last, manager email outlining what you are required to do. Let me read the requirement first, then we'll talk about each and every. You should assume that today's date is 1st March 2024. Respond to the instruction from your manager. The split of mark allocation is shown in Exhibit 5. Professional marks will be awarded A, B, C, D, E. Done. Core personal information. Core personal situation. Extracts from the memorandum prepared by your manager dated 1st March 2024. Background. Corey has always lived in the UK, and on 6th April 2020, he sold his home in UK and moved to the country of Medora with his wife Dana and their uh, and their daughter aged 10. They always planned to return to the UK at some point, which such that they continue to be domiciled in the UK. Corey began working for a company in Medora on 1st May 2020. In March 2023, Corey's sister Florence became seriously ill. Consequently, Corey and his family returned to live in the UK on 6th April 2023. Period from 6th April 20 to 5th April 23. Corey was not resident in the UK for tax purpose during this period. However, he visited the UK staying in hotels as follows: 2021 49, 21 22 105, 22 23 74 since 6th April 2023. On 1st June 23, Corey and Dana purchased a new family home in the UK. On the same date, Dana started a new full-time job in the UK and became UK resident. Corey and Dana have retained their home in Medora because Corey has continued working there and does not work in the UK. It is envisaged that Corey will have been in the UK for 115 days in the tax year 23-24. Disposals made by Corey. Hmm. Is it loading is taking place only at my end? You guys facing the same issue? Okay, open. Extracts from the memorandum prepared by your manager. Disposal of assets in the tax year 22-23. On 1st December 22, do you remember when Corey will be back into the UK? The Corey was coming back into the UK on 1st May 2023. So the first disposal which we are referring is before coming back of Corey to the UK. On 1st December 22, Corey sold a statue situated in the garden of his home in Medora. He had purchased the statue for 17,000 on 1st September 2020. On 1st September 2020. By the way, he moved to Medora on 6th April 2020. He's purchasing the asset on 1st September 20 and disposing of the asset on 1st December 2022. The sale resulted in a capital loss of 7,400. On 1st Feb 2023, as a result of commercial takeover, Corey received a 40,000 shares in TW PLC, a holding of less than 1%, and 12,000 cash in exchange for 2,000 shares in SQ PLC. One share in TW PLC was worth 3.5 on that day. Corey had purchased his 2,000 shares in SQ PLC, a holding of less than 1%, for 13,500 in June 2015. SQ PLC and TW PLC are quoted companies. Fine. Disposal of assets in the tax year 23-24. On 1st August 23, Kore sold a house situated in Medora. The house was purchased on 1st July 2020 and has always been rented out. The sale realized a gain of 34,500. On 1st December 23, Kore gave his sister Florence 700 of the 4,000 shares he owned in TW PLC. One share in TW PLC was worth 4.5 on that day. I have subsequently carried out some research work on the taxation system of taxation in Medora and can confirm that there is no capital gains tax in Medora. And there is no double tax treaty between the UK and Medora. Then proposed gifts by Emma. Extract from the memorandum prepared by your manager dated 1st March 2024. Kore has asked for advice on the IHT advantages of his mother, Emma, who is UK domiciled, making lifetime gifts to Kore of either or both of the following paintings. Watercolor, market value, anticipated change in value, falling value, portrait, current market value, anticipated change in value. Fine. Quad Limited. Extracts from a meeting, a memorandum prepared by our manager dated 1st March 2004, 24. Joint venture. Kore owns 100% of the share capital of Porth Limited, an unquoted trading company with annual profits of around 100,000. Fine. On 1st April 2024, Porth Limited will invest in a new company, Quad Limited. Q Limited will be resident in the UK for tax purpose and will begin to trade immediately. Quad Limited, okay, it will develop a range of products over the next few years. Fine. The planned ownership of the ordinary share capital of Q Limited is as follows. Porth Limited, 60%. Either Mr. Berm or Mr. Berm Company BJB Limited, 30%. CX Limited, 10%. Both Porth, BJB and CX Limited and Mr. B are all resident for UK tax purposes. So while reading the question, as I read this information, I am like, if the 30% shares are owned by BJB Limited, this company would be considered as consortium company. But if the 30% shares are owned by Mr. B or Mr. B, then it would not be a consortium. So this is the way I should be picking up the data while position. Kore has calculated So I repeat, if 30% is owned by BJB Limited, then it would be consortium. If 30% is owned by Mr. B, it would not be consortium, because for consortium, two or more companies should own more than 75. So if 30% is owned by Mr. B, then company's ownership is 70 and 30% is owned by individual. Hence, no consortium. Whereas if 30% is owned by BJB, then two or more companies own more than 75%. Then it would be consortium. I hope that's clear, right? Financial information. Core has calculated Q Limited budgeted tax adjusted trading loss for the year ended 31st March 2025 to be 44,000. While calculating this loss, Core has deducted 1,000 being the annual amortization charge included in the accounts in respect of clock brand note 1. He was unsure how to treat this, but a friend of his with some knowledge of corporation tax advised him that it is fully deductible. You know, there is the play of skepticism, like friend is saying do that. Is he saying correctly? So this is the skepticism aspect. The loss also includes deduction for the whole of the cost of the cost attributable to a scientific research project amounting to 74,500. On 1st April 2024, Q Limited will acquire a brand for 35,000 and begin to trade. The brand will have a 35-year life and will be written off for accounts purpose on a straight line basis. Now, under a straight line basis, 35,000 cost divided by 35 years of life, 1,000 amortization per year. Perfect, makes sense. But should we follow here in this particular situation? Should we follow the accounting convention or should we follow the 4% straight line element? So here, the 4% straight line element would be more beneficial as compared to the straight line thing. Scientific research, materials, rent, electricity and water, staff cost. The rent is appropriate allocation of rent payable for Q Limited premises for the year. I hope, let me just check. Hold on. Yep, I have shared my screen. $35,000 into 4%. 1,400. 1,400 deduction for tax purposes versus a deduction of 1,000, which is beneficial. So I hope the 4% element is clear, right? So Rishu, if you follow the straight line amortization method, the cost is 35, useful life is 35, right? 35,000 divided by useful life of 35. The amortization per year would be 1,000 straight away. But if I look for the 4% straight line as I calculated on calculator, the 4% straight line gives you amortization of 1,400. What is beneficial, to take the 1000 amortization or take the 1400 amortization? Yep. Rishu, this understanding is correct. We should consider the 25-year route. So if the useful life is like more than 25 years, and even if you do not even consider the 25-year life, if you simple follow, uh, the amortization calculation, uh, then you notice that it's 1000 per year. And with respect to 4%, so Umesh, did I miss anything? Yep, that's correct. Okay. Scientific research cost, material, rent, electricity, and water staff cost. The rent is an appropriate allocation of the rent payable for Q Limited premises for the year. All of the staff costs relating to employees of Q Limited, with exception of 7,000, which was paid to an external contractor provided by an unconnected company. Q Limited will be small medium enterprise for the purpose of additional tax relief available for expenditure on research and development. I have already established that research to be carried out by Q Limited will qualify for this relief. Q Limited will not surrender any part of the loss in return for a cash refund from HMRC. To tax manager, to tax senior from tax manager subject to a date. The relationship between parties is as follows. Core wife, Dana, sister Florence, mother Emma, and one daughter, 100% in Port Limited, Port in turn 60% to Q Limited. Fine. I would like to prepare a memorandum for the client file. Prepare a memorandum for the client files. You know, this statement is important. Memorandum for the client file. Memorandum for the client file. It means you are supposed to prepare a memorandum, and that memorandum would be for client file. Core UK resident status for the tax year 23-24. Explain how Core UK resident status for the tax year 23-24 will be determined, and conclude on his likely resident status for that year. I have already confirmed that none of the automatic overseas or automatic UK test has been met for 23-24, and you therefore do not need to consider these further. Is this clear? Is this clear? Like, no need to consider the auto residency test, no need to consider the auto non-residency, i.e. auto overseas test. Directly consider the ties test. State how becoming UK resident would affect core liability to UK income tax. So for the purpose of this part, you are not required to consider the availability of split year treatment. So again, under this paragraph, you are supposed to consider if the person is UK resident, liability to income tax. So not supposed to consider the capital gains tax or any other, just consider the income tax element. Then core disposal of assets in the tax year 22-23 and 24-25. For this part of work, you should assume that core is UK resident for whole of the tax year 23-24 and will receive taxable income of in that year of 42,320 before deduction of his personal allowance. Okay. Explain how each of core disposal in the tax year 22-23 will be treated for the purpose of capital gains tax. How? Each disposal will be treated for the purpose of capital gains tax. Calculate core capital gains tax liability for the tax year 23-24. So ratio in general, the split year treatment means for half of the tax year you are treated as resident and for half of the tax year you are not treated as resident. In general, that is the meaning of a split year. There are special rules, special implications, but I don't even recall even a single question where these rules / considerations examined. So that's why we are not going into the detail of that aspect. But like theoretically, practically, the concept exists. But from the examination perspective, it is effectively like not applicable, you can say. Okay. Lifetime gift of painting by Emmer, Exhibit 3. Explain with respect to the amount of IHT payable only. So you are not supposed to consider the capital gains tax or any other relief. You are only supposed to consider the IHT aspect only. Whether it would be beneficial for Emma to make a lifetime gift of either or both of her paintings, as opposed to retaining them until her death, there is no need to address the annual exemption as Emma makes uses of this every year. You should assume that there will be no nil rate band available regardless of when the transfer takes place. So nil rate band would not be available because like question said, she already makes enough disposals, which is like uses her nil rate band, etc., etc. Quad limited. Given that Core is keen to maximize the company's trading loss for the year ending 31st March 2025, given that Core is keen to maximize, like Core wants to maximize. If Core wants to maximize, then what will be the beneficial situation? If Core wants to maximize the loss, then what will be the beneficial situation? To proceed with the 4% straight line or to proceed with the accounting amortization methodology. Core wants to maximize its loss. Correct, 4% amortization. Explain whether you agree with the advice given by his friend concerning the tax treatment of the proposed purchase of clock brand for 35. Given the tax deduction, which will be available to Quad Limited in respect of scientific research cost of 74,500 to be incurred in the year ending 31st March 25. Calculate the amended budgeted tax adjusted trading loss for Quad Limited for the year ending 31st March 2025, taking into account explanations requested above. Explain how much of Q Limited amended budgeted trading loss will be available for use by Port Limited. Is this part corporation tax element clear? Perfect. Refund of income tax. I have become aware that few months ago, Puri received a refund of income tax from HMRC in respect of the tax year 1920. He has not been able to determine why the refund was made. HMRC errors or tax irregularity. In respect of the income tax refund, set out actions which our firm should take and the matters which should be brought to the Core's attention. So again, I just give you a reference, what it should be, right? So, any part of the question which is not clear type of thing? Yeah, so Rishu, I agree. And this is one of the rare section where the VAT is not tested. So this is very honest, very rare kind of situation where the VAT is not examined. Is my voice now fine, or is it still breaking? Thank you. Yes. So, Rishu, I am like, this is a very rare kind. Yes, I agree. VAT is not there. But this is like very rare kind of question paper in section A where VAT is not examined. So apart from the pointers which I pointed out at the start, VAT is an nor like based on past practice. So it's not a mandatory feature. Rest of the things are mandatory feature. VAT is not a mandatory feature. So this is like based on the observation, you can say. Yes, any question from anything, any point which is not clear from the question overall. Okay, so let me start about the requirement. Okay, if I recall what I'm supposed to do, I'm supposed to write to prepare a memorandum as advised by my mm, mm, manager, right? So I'm looking for the requirement again. So I'm supposed to prepare a memorandum, right? So what you are going to make is memorandum, and it was mentioned like to prepare a memorandum for the client file. Memorandum to the client files from who is going to prepare this memorandum. This memorandum is to be prepared by, your designation was mentioned over here, tax senior. Subject. Fine. So I'm done with the heading, and after heading, part A. So this is My heading 1 format. Part A, a suitable Part A is residence status for tax year UK residence status for tax year 23-24. My heading 1 is bold and underline only. Then assessment of core. This is my heading 2. Underline. Yes, how it would be assessed. Core residence status would be determined with reference to the ties test, where we will check how many days Core has spent in UK and number of ties which are met for Core along with his residence status of last year. Core residence status. So first I give a broad context how the residence status will be determined, because question explicitly asked me not to consider as already communicated Core residence status cannot be determined automatically he was not he was not UK resident in 2021, 22, 23, 23, 22, 23. He was not UK resident in 22, 23, and he is in intending to spend 115 days in UK in tax year 23-24. Tax tables. '91 to, so if 3 UK ties or more, Kore would be referred as UK resident if he meets 3 or more UK ties for the tax year 23-24. Yes, please. So I just mentioned it on a good to have basis. It's not mandatory. You specify that point again. This is to issue on your point. It's not mandatory. I just mentioned it on good to have basis. Not necessary. Close family member. Kore has a wife and minor child in UK. And this is met after close family member. House in UK made use of during the year. So yes. By the way, who purchased the house? Kore and Dana purchased a new family home in UK. Kore purchased a house in UK where he spent, which is made use of during the year, and this is met after the close family member. No, Kore was not doing substantive work in UK in tax year 23-24. Hence, this tie is not met. After this substantive work, more time in UK than any other country in tax year. Kore spent 115 days in UK and 250 days in Madonna. 250 days in Madonna. Hence, this tie is not met. Last, spent more than 90 days during either of two previous tax years. Either of two previous tax years means we are talking about 2022-23 or 2021-22. Yes, Kore spent how many days? Kore spent 105 days in tax year 21-22. Hence, this tie is met. Out of 5 ties, Kore meets 3 ties. Hence, Kore would be considered as UK resident for the tax year 23-20. Effect on Kore liability to income tax if become UK resident. To income tax if become UK resident. So heading 2 was underline only. So heading 2 was underline only. Yes, that's correct. Sorry, I just noticed like there are 2 comments. Let me look for the comments, please. Can we question mark and answer? Will it be professionally marked? So it's like I'm marking the standard principle, and after making the standard principle, to be very honest, I need to write it properly. So this is not the proper way to write. So here we can write, does Kore has a close family member uh, or stuff like that. So I need to more articulate the questions in the ties test. Should we start the part 2? I hope part 2 would not be much concerned. Effect on Kore liability to UK income tax if become UK resident. If Kore treated as UK resident, then consequences will be if Kore treated as UK resident. Accordingly, any income earned in Madonna would also be subject to UK income tax. Hence, income would have been already taxed in Madonna. Hence, double tax relief in UK would be available. The double tax relief would be lower of Part A. Anything to clarify? Anything which is not clear with relation to part B? Apologies. Anything to ask in relation to requirement A? Solution of requirement A. If any point not clear, do let me know, else I like to start point number B. By the way, this is my first heading, so it should be underlined as well. For this part of the work, you should assume Kore is UK resident for all of the tax year 23-20 and will receive income and will receive taxable income in that year of 42320 before deduction of personal allowance. The answer is yes. Explain how each of Kore disposal will be treated. How? Like explain. Calculate CGT liability for 23-24. So first explain, then calculate. Okay. explanation of foreign disposals in the tax year 22 for the capital gains tax. So if I look over here, there were four assets. The first asset was disposal of a statue, let's say. Disposal of assets in the tax year 22-23. Kore was not UK resident in the tax year 2022-23, but he was temporarily non-resident as he spends less than 5 years outside UK and having always lived in the UK prior to moving to Medora. Fine. So he was temporary non-resident. So first I concluded as a temporary non-resident, Kore will be subject to UK CGT on any asset sold while he was living abroad. Which he owned at the time of leaving the UK. any gains or losses are subject to UK CGT in the tax year in which Core will return to the UK then. So first I set out the background, the context for the 22-23. Now I'm going to talk specific. The statue was purchased after leaving the UK. Purchased on 1st September 22 and left UK 6th April 2020. The statue was purchased after leaving the UK. Statue was disposed of on 1st December 22. He was back to UK on 1st June 23. There will be no UK CGT implication on disposal of this statue. Consequently, there would be no relief on in UK CGT on loss realized on this disposal. Ah, let me check. I could be wrong. So this date they purchased a house 6th April 23. Thank you. Yes, that's great. So that's 6th April 23. Um, thank you, Abdullah. Second asset was on 1st Feb 23, Foray received 4,000 shares in TW PLC. So first, let me have word about this, the principle. Foray owns the shares whilst leaving UK, purchased on purchased on 1st June 2015. Foray owns whilst leaving the UK and these shares would be the tax rate and allowances of tax year of arrival in UK would be applicable. Disposal of assets in the tax year 23-24. For this thing, Foray was UK resident in tax year 23-24. Hence, the disposals made in 23-24 would be subject to UK CGT. So this is like, setting the background for this. Heading 2. Refer to working 1. For the tax year 23-24. Fine. After putting on this heading, no need to mention the spread cell number. So your working should be clearly labeled. That's it. So gains to be divided into 2 categories, right? $34,500. Shares in TWPLC. And second is shares in SQPLC. Total gains. Annual exemption. Taxable gains. Now, for capital gains tax to be taxed, his taxable income was supposed to be it was mentioned, right? It was just over here. 42,320. 42,320. This is its taxable income, right? This person has a basic rate band of 37,700 minus this. 7950 would be taxed at 18%. 22,200 minus 7950. 28%. Whatever is the amount of taxable gains over here, we're gonna tax at the rate 20%. So 7950 multiplied by 80. The sum would be because there was a share for share and cash exchange, right? So for share and cash exchange, we need to consider the disposal. And as we discussed in part A1, the disposal would be considered in the tax year of, the disposal will be considered in the tax year of I hope that's clear, right? Rishu, we discussed this point in the part one. Like the tax would be in the year of arrival in UK. Remember, so that is linked with that. Shares in SQPLC. So let me have a look at that again. Result, uh, Core received 4,000 shares in TWPLC. Value of 12,000. Two thousand shares at a cost of 13,500, right? uh, investment in SQPLC 13,500 due to exchange consideration received in the form of shares of TW. Consideration was the consideration was 12,000. So the number of shares were 4,000. Consideration received cash is by the amount 2,000. So the total consideration which I received is like 14,000. So 12,000 divided by 14,000 multiplied by 3,500. 2,000 divided by 14,000 multiplied by original cost. So this is the allocation of this 13,500, and gain element on share for cash exchange would be not 2,000 shares. He owned 4,000 shares in TW. One share in TW was worth for a purchase 2,000 shares. Sorry, the cash is not 2,000. The cash is like 12,000. The beauty over here is it automatically change overall workings. So 4,000 shares, 3.5. My bad, I mixed up the data. 4,000 shares in TW PLC at 3.5 per share. So it's like 4,000 multiplied by 3.5. Is this working clear to all, or am I supposed to provide any kind of explanation? Shares in TWPLC. So it's SQ. So to issue for SQ, it's basically you own the SQ shares. You surrendered the SQ shares and you are receiving the shares of TW, 4,000 shares of TW and 12,000 cash. So the cash element is taxed immediately. Cash element is taxed immediately, whereas the shares element will be taxed when you transfer the shares. So shares in TW PLC. The deemed disposal proceed would be recorded at market value. How many shares we are going to give? We were going to 5 is the market value on that day. This 7269 cost is for 4,000 shares. I am considering 700 shares over here, right? So the cost for 700 shares is like 1272. I hope the cost working is clear. This 7269 cost, allocated cost is for 4,000 shares. So to calculate the 700 cost of shares, I simply prorated it. Is the capital gain working clear or anything is not clear? Can I move towards the part C of the requirement? Mm-hmm. Perfect. So I understand, like, no need of exhibit one, no need of exhibit two. So close them. Talk about this one. Corey has asked an advice on the IHT advantages of his mother, who is UK domiciled, making lifetime gifts to Corey, either of both of her following paintings: watercolor, portrait. Explain with respect to. Explain. So before I start explaining in particular, let me first have, and please keep in mind, like, this requirement carries 6 marks. So out of 6 marks, probably 3 to 4 marks of general making lifetime transfer advantages, and maybe 2 pointers relating to the specific scenario, what we should be doing over here. Okay. So this heading one, right? That should be bold and underlined. The advantages of making a lifetime transfer are correct, Krishu. So this is, to be exact, first I need to capture the advantages of making lifetime transfer. As the gifts by Emma would be to Corey, they would be considered as potentially exempt transfer, PET. No inheritance tax would be charged if Emma survived for 7 years. If Emma expires within, but after 3 years, there would be paper relief. at 20% for minimum survival of 3 years. This will increase by 20% every year. As mentioned in the question, I'm not going to talk about annual exemption. Okay. The value of lifetime transfer is determined at the date of transfer, not at the time of death. Accordingly, one of the benefit of making lifetime transfer is one of the benefit of making a lifetime gift of portrait is the value of transfer would be fixed when the transfer will be made. And if Emma dies within 7 years, the value of portrait transfer date would be considered instead of death date value, which is expected to be higher, resulting in increase in IHT liability. The watercolor is expected to fall in value. However, if its value is lower than the transfer value as the date of death, a fall in value relief would be available. As a result, the lower value of the painting would be used to calculate the IHT. However, fall in value relief should only affect the IHT due on the watercolor itself. When calculating the IHT on subsequent gifts, and on that estate, the value of watercolor at the time of transfer would be considered, i.e., the higher value it is advisable. I'm done with this. So if any question, do let me know around the requirement number C. Abdullah, you are still like on what? So 700 into 4. 4.5, the market value of 700 shares. Then this 1272 is like 7269 is for 4,000 shares. So 7269 divided by 4,000 multiplied by 700. So let me close out this one exhibit as well. Given that Corey is keen to maximize trading loss, explain whether you agree with the advice. Okay, so let me now the first heading around this is should uh, so let me have a look over here. Purchase of clock brand. Not purchase of clock brand. We are talking about we are talking about amortization of clock brand. Just thinking of the heading. Tax treatment for purchase of clock brand. Yep. So for tax treatment purchase of the friend advice the friend advice is correct that the amount which is charged to the exact word is which is charged in accounts can be completely deducted from the trading income by calculating the corporation tax. So, like, alternatively, Quad Limited can make a claim to deduct 4% of the cost of log rent, 4% into 85,000, which we calculated was like 1,400, right? We can claim to deduct 4% cost of log rent to be deducted from the trading income of Quad Limited. the 4% straight line method approach will maximize the for the year ended 31st March 2021. Second, explain the tax deduction available, quad limited in respect of scientific research cost. Tax deduction. What I write about tax deduction? SQ Limited would be considered as small and medium enterprise for the purpose of research and development, qualifying expenditure would attract tax relief at 230%, i.e. 130% additional tax relief. This additional expense deduction is not available on, it is not available on rental cost. Only 65% of amounts paid to external contractors qualify for this. Explain the tax deduction. It was mentioned. It's not I decided. We should just hold a second. Let me point this out. Because of material. Yep, that's correct. So whether the company is SME or large company for research and development purpose, that will be mentioned in the question. So 21,000. Material 21,000, then electricity and water 74,500. Electricity and water is like 6,600. Staff cost as part of staff cost. So 65% of 7,000. Four double 50. I forgot to go again. Not enjoying this with that is that word. Material, electricity and water. Other than contractor. 29,500 minus 7,000 external contractor at the rate 65%. So this is total then. So 35% is expenditure, but it will not qualify for additional leaves. Additional leave is a different story, but it is expenditure. In the same way, rent, is it an expenditure? The answer is yes. It's not qualifying for additional, that's a different story, but it's an expenditure. So the total expense reduction would be 145. Issue, honestly, I just read your feedback, and it's a very honest thing. I started working first, completed my working, and once I'm done, so is it fine now? Part C of the requirement. Part C of the requirement is calculate the amended budgeted tax adjusted trading loss for Q Limited for the year ending 31st March 2025. So the heading for this should be amended budgeted tax adjusted trading loss for the year ended 31st March 2025. So your feedback, should we be doing this over here or should we be doing this on the spreadsheet? Yep. So my budgeted my budgeted loss was 44,000. Budgeted loss was 44,000. Additional deduction for R&D cost. According to me, R&D deduction should be this much amount. We have already deducted 74,000. So as a result, the additional amount of R&D which can be deducted is like 71545. In the same way, additional deduction for amortization would be 35,000 into 4% minus 1,000. So this is my amended budgeted tax adjusting loss. Yep, for sure. Ah, so Abdullah, 74 is basically the amount of R&D as per note number 2. Seventy-four 500. My bad, my dear. Thank you very much. You saved my working for the second time. Thank you very much. Is this part clear? If yes, so I like to move to the last part of this requirement, part D of the requirement. Amended budgeted trading loss of Quad Limited will be available for use by Port Limited. Your issue. Issue, sorry, I missed to answer your this one comment. The answer is yes. Like as per the direction of the question, we are assuming the maximum approach will be followed. Like anything which maximize the loss will be followed. Fourth Limited will only be able to adjust the loss incurred by Quad Limited if Fourth Limited is a consortium company. For Fourth Limited to be considered as consortium company, the 30% shares must be held by BJB, if I'm not wrong. That was this one. BJB if Mr. BERN. If Mr. Brem owns the 30% shares, then Fourth Limited would not be considered as consortium as 30% would be held by individuals. If Port Limited is treated as consortium, then Quad Limited can adjust Quad Limited can adjust six nine two six seven. Of trading loss with treated as then Quad Limited can adjust as can be. I'm done. The full and final and the last thing. Thank you. I calculated 60, but I wrote 40. Thank you. Refund of income tax. 5 marks, I believe. Yep. Ethics is of 5 marks as always. Should I start the discussion around refund of income tax? Not take more than 5 minutes, honestly. Honestly, not take more than 5 minutes. I understand we are overrunning by approximately 50% of the scheduled time. So we'll be doing that tomorrow, section B. Okay, so let's start the last element for today. Yep, questions tomorrow for sure. So if I look into the situation, refund of income tax, I have been aware that a few months ago, Kore received a refund of income tax from HMRC in respect of the tax year 1920. He has not been able to determine why the refund was made. In respect of the income tax refund, set out the actions which our firm should take, the matters which should be brought to Kore's attention. Okay. Refund of income tax. We should review Kore's tax return of Rishu perfect two-liner answer, but I need to elaborate. So in essence, yes, you are right. I 100% agree. But I need to elaborate these two lines into at least 5 bullet points to get the 5 marks. We should review Kore's tax return for the tax year 1920 in order to determine whether there is a valid reason for refund or not. If we conclude that this refund is error on part of HMRC, we would advise Kore to refund it to HMRC at earliest. We would inform Kore that if he not made the refund, that would be a civil and or criminal offense. HMRC if Kore is not willing to refund this amount to HMRC, we should consider ceasing to act his tax advisor. You would then notify the same to HMRC that we are no more tax advisor to Core without disclosing the reason. Finally, we should consider whether it is necessary to make a report under money laundering regulation. Rishu are great pointers, honestly. Yep. So I'm done. If there is any question, anything which require clarity on your part, please do let me know. Mehman, let me give you the honest answer of this. So every question is easy if you are picking up the data and like that makes a flow in your mind. Every such question is easy. But if with any of the question you are not picking up with the data or flow is not making in your mind, very honestly, every such question would be difficult. I will be sharing the link. You're welcome. Drop me a WhatsApp for this. I'll share it. The answer is no. Memorandum, is it really closed? The answer is no. Rishu, yes, tomorrow link will be shared. When I saw the question, I found knowledge gaps, but when I said to learn the gaps, so I need to understand slash analyze what kind of knowledge gaps you are referring. So if you are like, for example, just to give you a reference of this question, out of five questions, for example, sorry, in the first question, out of the five ties, if you recall three or four ties, then it's the understanding gap. But if you are like missing out some of the points, so we need to check what are to be exact the sum of the points. So if it's really some like nominal, it's fine at the moment, because the more you practice, the more you will, the points will remain in your mind. The retention of points would be higher. Yep, for sure, Umman. So we will be doing the section B type questions tomorrow of the same paper. So till yet, it's expected to be same, but like Vishu informed, I will check about the downtime of this platform. Maybe we can uplift or uh, push the time forward accordingly. You're most welcome. Take care. Apologies for being delayed. Have a good night. See you guys tomorrow, inshallah. Allah Hafiz.